What would happen if you could go from struggling to profitable in your trading with two simple rules that can shift the odds into your favor? Hello and welcome back. My name is Doug. I'm the creator of digitalcurrencytraders.com and introtocryptos.ca. Hit the thumbs up. Be sure to subscribe for the next videos. I always like to read your comments down below, so be sure to leave one. I found these trading rules a couple years after I started trading back in the 1990s and after I lost all my money twice. I had learned all about entry patterns, but I hadn't learned anything about risk control. So when I created my first crypto trading course in 2015, I reorganized all of the random information that I had picked up over the years, and I placed it into the order that I wish I would have learned it. So I'm introducing these two rules in the next couple videos before I reveal my trading plan entries and exits. I want to help new traders establish a good foundation that will help ensure that you don't lose all your money, like I did. You don't need to make the same mistakes to learn these lessons. You can learn by observing my mistakes, and I'm happy to share them, even though I paid a lot for them. Many of you have experience with trading already. These rules have provided some of our experienced students with a flash of insight that immediately improved their trading results. And others, like myself, need a bit of study to build beliefs around this profound but subtle shift. If you're new to trading, then learning this approach at the start will definitely improve your odds of success. Now, before you consider placing your next speculative trade, you must be able to repeat these two key rules from memory out loud without reading them. These two rules are simple to memorize and they're simple to state. That's part of their beauty. But these two simple rules have profound implication to your trading. No matter if your trading methodology may favor chart patterns and technical analysis, or it may be fundamental analysis and news events. These two rules can shift the odds in a game that's normally stacked against you. If you're serious about making money in any markets, learn this before you trade. Think about it, practice it, just like a pilot learns and practices simulations before they fly for real. Profitable traders share common, learned habits. The people who are profitable generally share common methods, common standards, and common rules that they all abide by. Even if they're wrong 70% of the time, and they're right only 30% of the time, they can be profitable in today's difficult crypto markets. You may have been trading cryptos and maybe you're making 60% correct calls, and yet you're still struggling to make profits. If this is the case, I invite you to imagine what would happen if you had applied these two rules to your former trades. When I first reveal rule number 1 and rule number 2, they will seem oversimplistic. So before I do that, I want to uncover the subtle elements to these rules and consider the consequences to your trading over a long period of time. By the end of these next two videos, I hope you come to understand the profound impact that this approach can have on your trading and any other risky thing that you're doing. No matter what kind of risk you're taking, you will want to incorporate rule number 1 and rule number 2 to help protect yourself against the negative consequences of the risk and to make the positive results even bigger. You can use them for setting goals, correcting missteps quickly, and boosting the success of any of your endeavors. Once you see how the effects of rule number 1 and rule number 2 work together, they will naturally become part of all of your trading. By practicing these two rules with micro investing to start with, you can build habits and wisdom that will help you gain similar mastery over larger trades and over your fiat cash stack as well. Growing your micro investments in crypto can be a lot of fun. Dealing with money actually should be fun. And this is a great place to learn and practice these successful habits with money. Correcting common trading mistakes. One student recently wrote in, I was trying leverage trading this week on gold and silver, and I noticed that I was really anxious when I was at a loss, and I would get out very quickly if I was in a profit. This is a wonderful example of natural human emotion, and it's the reason that we want to start off small when we're learning to trade with no leverage at the beginning. I've always been so grateful for that comment because I also have the same emotions many times in my trades, especially if I'm over trading with a position size that's too large, and if I've put on a trade with too much leverage and my stop loss is too close to the market. For my trading method, I have to give the market room to move. That means if I'm trading correctly, my position size at the start will be small enough that it can comfortably have the room it needs to move within the technical levels. We just want to play. We just want to get used to it. At the beginning, we have to learn not to be anxious about the loss. We have to expect it. We have to plan for it. It's part of the work that our money is going to be doing on our behalf. We must change our thinking about the difficulties of a small loss and instead start with the perspective that that small loss is actually protecting us against the nasty things that the market can do. Those who lose best will be the biggest winners in the end. Now this takes some study, some repetition, and some practice. Like learning anything, it will start out difficult and it soon gets easier, and with practice, soon it becomes second nature and almost effortless. Our premium community of traders refer to these two rules all the time. Let's review a couple examples in order to appreciate the profound implications of what these rules can bring to your trading strategies. Behavior modification is without doubt the key to trading success. It starts with how we think, and yet we need to also change our beliefs before we actually change the actions that we're going to take. We must be very clear about the trading situations that we are in control of and the situations over which we have no control. I offer these lessons that I've learned and that I'm practicing as guidance, but it is your own determination that will make you a success. I can share the knowledge, but it's your efforts to make these rules into a belief and then into a habit. These two rules will be responsible for protecting your assets, and they will also keep you in the game forever. It can be very costly to make trading mistakes. I'm happy to share my mistakes if they will help shorten your road to success. First, in your trading career, you'll find that the markets go back and forth without going anywhere most of the time. Second, you will also find that you do not ever control the market, but you only control your position. You can stop your position whenever you want, and I want to drill that into your thinking. You can stop the market's effect on your equity anytime you wish. Simply stop or remove your position. The main reason I'm creating these video tutorials is so that I can become a better trader myself. There have been times when the market did a total surprise to me and I got killed by the market, taking big losses. And it was after the fact that I wondered, what did I do wrong in my trading? It took me a while, but I discovered that I didn't even know what the right thing was. Fact is, I had not taken the time to consider what a big move could do to my trading account. You may hear the cliche that the big money is on the surprise side. But what that really means is that the big losers are on the familiar side or on the expected side of the trade. In the beginning, it didn't even occur to me that I should be prepared for the possibility of a really big move against me. I was often overpositioned, even though I thought I had a good protection plan. And I was mistakenly doing the work that my money should be doing. Everything I did in my trading plan was based on the estimates of how much I could take out of the market. My trades were actually designed to lose, and the worst part is, I didn't even know that my strategy was ruining a good trading system. Many times when I thought I was smarter than the market and I kept sticking to my predictions, I ended up taking big losses in such a short period of time. Maybe this has happened to you as well. Why does this happen? Mostly because I didn't consider, what if I'm wrong? My thoughts were always on expecting to be right. After all, why would I put on a trade if I didn't think I was correct? Herein lies the key to being a successful trader. I've learned this over and over again in my trading career, and I haven't found any crypto YouTuber who will tell you what I'm about to reveal. In trading, if you have bad luck, it will eventually stop you from trading. You have to be prepared for bad luck. It's a requirement in trading. You will not survive if you do not plan for bad luck. My first step in trading is to remove bad luck altogether. We must plan for the assumption that the trade will go against us as long as it's a possibility and not only when it's probable. This is a very important point to trading correctly. This will be the surprise side in trading. The surprise side is a possible outcome, but not a very high or likely probability. Most traders only plan for the probable side, that is, to them, the side that is always they consider to be the winning side. This is the biggest mistake that I was making in my trading. Instead, I have to plan for being on the losing side. Trading is not a favorable game in most circumstances, and that is what we must use as our assumption when we start. The big mistake I made was thinking and expecting that the trade would go in my direction. The correct way to control positions is to only hold them once they prove to be correct. We let the market tell us when the position is proven correct, but we never let the market tell us when the position is wrong. As a good trader, we must always be in command of knowing and telling ourselves when the position is bad. The market will tell us when the position is a good one to hold. Most traders do the opposite of what is correct by removing positions only when they've been proven wrong. Think about that. Your exposure to risk is much higher if you let the market prove that you are wrong, instead of your actions of removing positions systematically unless the market proves the position correct. You never want to be in a position that has never proven correct. So here's rule number 1. In a losing game such as trading, we shall start against the majority and assume we are wrong until proven correct. Positions established must be reduced or removed unless or until the market proves us correct. In other words, the one criteria for removing a new position is because it has not been proven correct. If the market does not prove the position correct, it's still possible that the market has not proven the position wrong. If we wait until the market proves the position wrong, you're wasting time, you're wasting money, you're wasting emotional effort continuing the hope that the position is correct when it isn't. Hope is a beggar. If you're hoping your position is correct, it obviously never was proven correct. Remove the position early if it doesn't prove correct. By waiting until the position is proven wrong, you're asking for more slippage because everyone else will be in the same situation being proven wrong too. What makes this strategy most comfortable is that you must take action without exception if the market does not prove your position correct. Many traders succumb to fight or flight or freeze reflex, and they do nothing, and the market stops them out. It isn't even their decision to get out of the market at all. It's the market's decision. But this approach will increase your losses and your stress. Instead, consider this thinking. When your position is correct, you have nothing to do, instead of doing nothing when the position is wrong. Let's consider the kind of thinking that might keep you in a losing position too long. Who's to say that a position that was not proven correct might turn from a bad position into a correct position? Well, if we fear being wrong when we get out of the trade and we are worried the market will show us that we should have stayed in the position, then we have the habit of not taking early losses when they are small, and it always becomes more difficult to take a loss as it gets larger. And it's those occasional big losses that take away the money we had working on our behalf. It demoralizes us, and it can take us out of trading. Our first job, our primary responsibility, is practicing the swiftness needed to keep your losses small and as quick as possible. It won't always prove correct, but you'll stay in the game this way. You will avoid the big losses this way. I didn't know what my choices were when it came to assumptions about what is possible in trading. I started with the assumption that it's my job to make money in trading, but this is totally backwards. My job is to take losses, quick and small. I now know to assume that my position is wrong until or unless the market proves it correct. I now know my job is to determine when I'm wrong. And that wraps up rule number 1. The other side of the coin is that you will get positions that are correct. Maybe you've heard the cliche, cut your losses and hold your winners. But this only addresses the need to keep your losses small, and it misses out on a second factor we'll cover tomorrow for helping you with consistent profits. When your trade is correct, you must be bigger at that time. This requires a rule or a strategy that's designed around adding to winners in this unfavorable game to be sure that you come out ahead in the long run. I'm super glad to have you along for this video. We're going to cover rule number 1 a lot more as we go through the trading plan itself. And in the next video, I'm going to uncover rule number 2. Thanks again for being here. Hit the thumbs up. Be sure to subscribe for the next videos. I always like to read your comments down below, so be sure to leave one. Thanks again for watching all the way through. Trade safe and keep those losses small.